as of the close on April 30th, 2021. Now, Google reported this week, along with Apple and Amazon and Tesla and Facebook. And it is one of the only ones that's really sort of holding its gains intact up here. It's the only one that has come back and surpassed its after-hours high as well that it printed after its earnings report. I'm not sure about Tesla yet. I haven't done my video on Tesla, but I just finished up my videos on Apple and Amazon, and both of those stocks are having a problem of not getting back to the after-hours high. But here you can see that Google had no problem doing that. I gave a target of a 24.25. I'm sorry, actually I gave a target of 24.17 to shoot for after hours on the report, and it actually ended up going to, it actually surpassed that a little bit. No, actually after hours it went to about 24.11, and then in the light of the day after it reported, it went through the median line, as you can see here. So let's take a look at this particular bull fork so you can plot this one for yourself. We take the January low coming in 3 days into the new year. That is plot 1. The next swing high at the February high, and then this low at the March low for the stock here on March 25th. And that was a market-wide sell-off low. So this is a really great, really nicely paced bull fork. It's not too accelerated. And you can see that the stock has been trading in the lower half of the fork, gravitating to the median line. What we want to see for Google is to break out over this median line and begin trading in the upper half of this fork. So to do that, we've got to see the stock get over this area of about 24.25 to 24.35, get up above that and start making closes above that, and then basically just start trading along the top of this fork. So if you have a daily chart and you have an Andrews pitchfork tool, those are your plot points that you want to use. The January low, the next swing high that it made into the February high, and then this market-wide sell-off low on March 25th here at the end of Q1. That's what we'll project it out for you. Basically, once we see it rise above the median line and trade in the upper half of the fork, maybe we're looking at a move at some point all the way to the top of the fork. Right now, if it were to have do some crazy move where it came out of the gate and traded all the way up here, within a few days, that would be at 2635 and rising. So that's not going to happen. So we're saying like maybe over the course of the summer, it's going to work its way up towards the 2600, 2700, 2800 mark. And that's where it's going to be when it gets to the top of this fork. If we're going to see any further downside instead, as we go into next week, maybe in sympathy with the things that we're seeing on Apple and Amazon, then we look in closer and we look at these simple moving averages and the bottom of this fork. So if it were to come down here to the 10-day simple moving average and hold, maybe it comes back and it fills the gap to the earnings day close at 2290. So if you see the stock come back down to about 2300, the low 2300s, that's a hold of the 10-day. If it comes all the way down and looks below 2300, it's testing its 20-day and filling the gap to the pre-earnings close. And if it fails all this stuff, it'll come down here and test the bottom of the fork at about 2235 or so. That's it. I hope this video helped you out and gave you a good idea of where Google's at and where it's going. As always, good luck and good trading.